Then a good part is taxes. Most of us don't factor in taxes in our negotiation. For example, now I've done my costing. What I would sell a product is 10 naira. I know that when I sell product 10 naira, I'll make a profit of 5 naira. We always forget to include the element of tax in it in our transactions, and we just wait out one day. You don't even think about it. Then one day the tax man comes and knocks on your door and find out that you're trying to making a loss because you didn't factor in your taxes into it. So you have the VAT, you have the withholding tax. VAT usually is always 7.5%. Withholding tax is always 5 or 10% depending on the services. Then you have some specific industry taxes. If you're in maritime, you have to pay an extra maybe 2% cabotage. If you're in oil and gas, you have to pay an extra 1% NCDF fund and tax. So there's some taxes based on some particular sectors you are in. So you need to have a strong knowledge of taxes. And secondly, there are some mistakes we do in taxation. Now, this is not to tell you to avoid paying taxes. Let's just tell you that you need to have a contracting principle in place. I would say a caveat now is always talk to your tax man. I'm not a tax expert, but this is based on my knowledge of contracting over the years. And for example, if you are doing a contract that involves something that happening outside Nigeria and inside Nigeria, sometimes we lump it up together and start paying taxes for things we're not even supposed to pay for because maybe some parts happen abroad. So my general knowledge of taxation tells me that if something happens and stops abroad, that scope shouldn't be included in taxes in Nigeria. But usually we do a tax with a foreign company and we just lump everything together. And when the tax man comes, it looks at the figure and taxes you on things that didn't even happen in Nigeria. So, but it's different when something happens in Nigeria and something happens in UK and ends in Nigeria. Yes, you can pay taxes on all. That's it down to contracting, not a great knowledge of contracting. So usually in situations like that, you're supposed to have a out of country scope contract different than in country contract different because technically they can be regarded as two different contracts. So taxation is very important. Insurance is very important. And regulatory compliance. Know the sectors that affects the compliance agencies that affect your sector. For example, if you are dealing with food, you have to rely with NAFDAC. Even though you are dealing in oil and gas, you now have to go with the DPR or the NUPRC, now they call them. And NPC, you have to deal with them. But dealing in maritime, you have to deal with NIMASA. So there are always licenses and permits you require. So it's important that you know that because honestly, you can shut down your business. You can get hefty fines for not having those licenses in place. You can even go to prison for that, depending on what the law sets in that sector. So those are very important. Of course, like I always say, contracting is very important. Have your contract in place, well drafted to cover all your risks and liabilities. Some you have to, some of them during negotiations you have to carry them on. Like, oh, okay, no choice, I have to accept this risk, but have them at the back of your mind and try as much as possible to mitigate them or have limiting factors that would limit your liabilities as much as possible. Yeah.
So you actually mentioned tax. So, and I want us to talk a little bit about it. So let's assume a business owner has not been paying tax for his business. Is there any point at which he will be held liable personally to pay up all those tax in case probably the business went under, but the business had made a lot of money in the past? So is there any case where the business owner will be held personally liable for the tax?
Honestly, it's a yes or a no. A yes in the case that the business owner can be proved to be quite fraudulent and, if possible, diverted the complaint's assets into his own personal assets. How CAC is structured now is once you are registering a new complaint, automatically you are getting a TIN number. That's a tax identification number. And you go to the bank, you open the bank account. And I always tell small business owners, if you're doing anything personal, do not use your complaint account because for everything you do in your complaint account is taxable. So if it's a complaint thing, use the complaint account. If it's a personal thing, use your personal account. It's two different things. There are taxes you have to pay. Most people think because they are small businesses, they can always say the tax man is interested in their small naira and kobo. But honestly, it gets to a time whereby you need something and you find out that, so you're being 3 years tax returns, you now find out that you have a hefty tax.